There we go. Good morning, everyone. This is Czar. Hope all is well. It's 9:27 a.m. We're about 2.5, 3 minutes away from the New York Open. Looking forward to some more fireworks today. After a very big day yesterday, of course, everybody saw what happened there. I think it's FOMC day. Just this massive move, huge rally. It looks actually quite small on this chart because we're kind of crunching everything down, but this was a gigantic explosion essentially on the 2 o'clock news. NASDAQ rallying nearly 200 points, 190, 186 points there just on that first, second, or third candle. And then this huge sell-off subsequently to the tune of 554 points from top to bottom. That's about a 4.8% swing intraday, which we don't see very often, not just even lately, but in history. Those intraday type swings on a percentage basis. And of course, we never see those point swings because the points are so high now. Of course, they on a relative basis, they're quite a bit different. All right, what are we looking at today? We are looking at the NASDAQ. We're trading the NASDAQ for now. We can trade just about anything here. Well, just about anything. And we sometimes do. We mix it up a little bit. But for now, and for the last many videos on YouTube, in the last 3 weeks, it's been basically the NASDAQ futures. In this case, it's the micro E-minis. You can trade any size contract you wish. You may be trading the S&P, the Dow, the DAX, cryptocurrencies, Forex, you name it, oil, gold, soybeans, coffee, cocoa, corn, whatever you like. All the principles that we talk about here will apply to all of those things. Give me one moment here if I can. Excuse me, I just muted the microphone and had to cough because my voice is very, very raspy. I've been losing my voice lately from all the videos, well over 100 videos, probably about 110 videos now in the last 3 weeks, which must be some kind of a record. But here we are. A 10-minute chart on the left-hand side and a 1-minute chart on the right-hand side. And that's all we do. 10 minutes left, 1 minute on the right. They're both NASDAQ. I'll also take you over periodically to the screen here. These are the three sisters, 3 U.S. indices, the NASDAQ again on the far left, the Dow in the middle, and the S&P on the right. And we're looking for here, that's the open, by the way, the open candle. See that little flurry of activity? Or that big flurry? Looking for synchronicity, congruency, divergence for possible clues as to where this market is going to go next, and inviting us to come on board for the ride. Back to the main screen. We got some movement here on the open candle, which is often the case. Driving down, the weakness continues for now. This candle is now a big blue candle, as you see here on the far right. This 1-minute candle could turn white in the next few seconds. It's just the way things have been working lately on the New York Open. Lots of chaotic flurry of activity. And this is why I typically wait for the first candle, the 10-minute candle, to actually close before even considering taking a trade. There are times, and you'll see videos on YouTube where I've taken trades in the during the first candle, but it's few and far between. And there are very specific pre-market reasons why I will do that. Today's not one of them. This is a range-bound pre-market. I need prices to break convincingly out of this opening range in order to even consider taking a trade. For me, the first candle is the starting range. So let's say this candle closed right now. This would be my opening range, right? Remember I mentioned this current candle turning white? Let's see if this happens. Right now it's blue for now. So the first candle, let's say it closes here, would be my opening range. But not just that first candle. We need to take into consideration anything that's around it in the fairly recent history. Let's say the last 10 candles or so, which would include all of this. So I can tell you right now that my opening range requirement will be this amplitude that you see here based on that red marker, right? If prices don't get out of here and close outside of here, I'm likely not going to even take a trade here on the open. And that's been the way it's been for the last many videos that we've done, where I've taken no trades on our live streams. And one of the reasons why I've stopped doing live streams for now. We're happy to bring them back if there's a big demand for them, but we're not taking trades. We're talking about the open. That's very important, by the way. I recommend watching those open videos, London Open and New York Open, to get an idea of how we think about opening ranges and why we're not taking trades on those opening ranges. All of our trades and our string of winners have come from a couple of break evens in there, but our winners have been coming from later on in the session during range expansion. And that's the way the market's been behaving lately. And the reality is, because this opening range is such a broad flurry of activity, this opening candle, pardon me, that means that our range has to be, so that the trader actually requires more movement to be able to get out of that range in order to give us a signal. So that's why you're seeing that. Whereas, a few months ago, the ranges were smaller on the open, so range expansion would happen in the second, third, fourth candle and give us trade opportunities. Not seeing that. Look at today, a prime example. How now market action is right in the middle, dead center of that 10-minute candle. Can you see that there? That's indecision. That's a battle between the bulls and the bears, the longs and the shorts, and good and evil, and neither of them winning the battle right now. We'll see. Look at this. How did that long, dramatic, bearish blue candle turn white all of a sudden? That's the amazing thing about these opens and why we take it easy, watch what happens, and get some direction first. Here we go. Now we got some fresh buying. You can see that flurry of activity. We're going to watch this play out here for a little bit. Getting a push now, but still in the range. We haven't gone anywhere yet. There's a lot of dancing around. But I'll take you over to the sisters grid now, and you'll see these three indices all doing pretty much the same thing. And what I mean by that is all of them trading above the New York Open, which is the yellow line you see right there, the straight horizontal line. That's the New York Open. That's the New York Open on the Dow. And that is the New York Open on the SPY, S&P 500, right? I know the SPY is actually an ETF, but we all understand what we're talking about when I say SPY. Okay, same thing. There is no divergence here yet. A little bit of a lag right now. You see this on the candle, on the NASDAQ, lagging a bit over Dow and SPY. But nothing serious yet. We'll see what happens here. I'll bring you back to the main screen. You'll see that we have very much of a doji happening here. Big, long wick. Body in the middle. 57 point opening candle, and we're not done yet. We still have just under 5 minutes left. All that talking, all that chaos, and we're still only halfway through this 10-minute candle. Can you believe that? And look at what happened so far. Pretty much nothing, right? But it sure looked like a lot was happening at any given point in time if you took that as a snapshot, right? Looking over at my chat group, they're hilarious. Still doji, guys, on this candle, right? We're dead center right now. See right there, top of the wick, bottom of the wick, dead center. Indecision. This market is deciding nothing for us, and I'm willing to wait as long as the market wants to wait in order to give us direction. I should try to speak less here with my voice failing me a little bit. I mentioned on an earlier video that I think I've got a little bit of a kind of very mild laryngitis here from all the talking in the videos, over 100 videos since we started 3 weeks ago. Not to mention working with our group here on Telegram. Telegram, Zerillion Trading, a Telegram, free Telegram group to join us if you're like-minded and want to see what we do and learn what we do. Come on by. Happy to have you. Great group, terrific vibe. Everybody treats everybody with respect. We're just here to learn and to grow, to share. That includes me. I'm here to learn too, even though I'm in my 4th decade of trading now, and long history in the institutional asset management world. But a lifelong learner. As I mentioned to one of our members or friends online here, that I come every day. I come to the markets every day with a beginner's mind, ready to learn from what the market has to teach me and what other traders have to teach me. Whether you've been trading for 30, 40 years like I have, or if you're brand new. Sometimes a trader who's been only doing this for 6 months will have a little nuance of an idea that will trigger something in me, and I'll take it deeper, and that's how we learn. That's how I learn. But I'm humble enough to admit, and that sounds like a boast, but I'm humble enough to admit that I got so much more to learn, and that anybody can teach me something about something. And that's what I'm here for. I hope you are too, and can join us here in the group, and on Twitter as well too. Zerillion Trades on Twitter, and Zerillion Trading on Telegram, and the links are in the description. You can just click them and come and join us and have some fun with us here. Guys, there's 1 minute left in this 10-minute candle. 1 minute left, 55 seconds now, and we've seen nothing. This is the opening range has now been set. And so now the game really begins, right? What's going to happen from here? So this idea of jumping into action just because the market exploded on the open is really a misnomer, I think, for most people and for most traders, and something that I moved away from many years ago. For me, the real stage hasn't even been set until this candle closes, and maybe even the next one, and maybe even the next 2 or 3, which means 30, 40 minutes into the open, right? We have exactly 10 seconds left now for the close, and we are sitting doji in the very center, right there, dead center of the first candle. Nothing has transpired, except for a bunch of people being whipsawed in and out and losing money, right? A few people would have made some money, but it would have been very much a coin toss. And not the kind we talk about here, the resourceful coin tosses. Look at this, guys. See, that candle just sitting there, just saying, what am I supposed to do? Where am I supposed to go? And as traders, it's okay if we say the same thing. What am I supposed to do? Where am I supposed to go? Well, the beauty of trading is that, you're not supposed to do anything yet. There is no supposed to. You can sit out. You can sit out every hand, as a matter of fact. Think of this as like a poker game, right? Without the big blinds and the small blinds or little blinds, whatever you call them, those antes, you don't even have to pay to play. You can just sit and wait for the perfect hand to be dealt you. That means an optimal setup. And only then choose to play the hand. You can just... these are all hands being thrown at us right now, these little moves. Look at the 1 minute. Each one of those 1 minute candles is a hand. We're being dealt a hand. And I folded every single one of them. I folded this blue candle, then I folded the next one, then I folded this big white candle. Not optimal. It felt like a strong hand there for a while. But I realized that's not the one I want to play with. I'm waiting for something else. I want my hand to look like a break and close above this area into this new zone with a pullback and a fresh wick on the bottom. Am I asking too much? No. It might not happen, but then I get to sit out and not play any poker today, if you want to call it that. That's a metaphor that some people can relate to. Doji candle first. We're now at beautiful doji candle inside candle here, right? In other words, it's encapsulated by the one in front of it, to the left of it, higher high and lower low on the previous 10-minute candle. This is an outside bar. This is an inside bar or candle. You can use those terms interchangeably, it's fine. Just going to send a little note here to my Telegram group. Bear with me. Just to remind them that this is a range-bound open. This is the opening range, and there's no reason to be doing anything here. And that's the beauty of having this group, is we get to share what we're thinking. Okay, we're getting a little bit of a breakout here, but I want them to know that it's once that range is cleared, we get really interested. Getting some movement now. I just sent the note range bound to my my group, and all of a sudden it threatens to break out. Here we go. Finally some movement. Let's see what we can do here. All right, 4 minutes and 47 seconds left here. I'm going to delete this range marker now so we can keep things nice and clean. We've blown through this next zone, which wasn't that big. It's fairly small. Well, 21 points. It's small by NASDAQ standards these days. That would often be an entire day's amplitude or range just a few months ago. The VIX is high right now. Volatility measure. Okay, watching this now. 4 minutes left in this candle. I like to see it close first. Could drive without us, and I'm okay with that. This market is very vulnerable. We're down 185 points this morning already in futures contracts, or 1.7%. That's after a nearly 4% move down yesterday. This is big. We're in a bear market, folks, right? I always like to remind people of what the environment is. And sometimes if you get scalping and looking for little day trades and little moves like this, you forget about the big picture. This is a bear market. We're down 37% from peak to trough on the NASDAQ. 37%, right? We're getting closer to a slice and a half in a broad-based benchmark. And similar structural pictures in the Dow and the NASDAQ, in the SPY, S&P as well. The percentages aren't the same, but you get the idea. Bear market is bear market. Now I will show you this, since we have nearly 3 minutes left for this thing to close. Is going back to the sisters. And you'll see a bit of a divergence here. Notice what's happening. The yellow line, horizontal line, is the New York Open. Yeah, now they're synchronizing again. The Nasdaq, the weakest of the three. All three are trading below their open, or below the New York Open, and below their EMA, their 20 EMA in this case. But the Dow less weak, right? In other words, stronger on a relative basis, even though it's not a strong picture at all. That's a very weak picture, but on a relative basis, has relative strength. You'll hear that term quite a lot, right? Everything rounding over now, looking to sell off lower. We have 2 minutes left in this candle. I'm going to see if we can get a trade here. I'd be looking to set up a sell stop loss, or a sell stop order, pardon me, not a stop loss. Sell stop order, which gets triggered automatically. This is not a live order. This is just an idea. I'll let you know when I take it live on my own platform. We're not there yet. I like the way this is pulling back. I like to see that actually close up there if it can. And look for something else here, which I'll explain. Let's go to my platform now and setting up a sell stop limit order. I trade with Interactive Brokers for scalping and for day trading. I use other brokers for swing and position trading. All right. This is not a trade. This is not an order. I mean, it's not a live order. It's an idea that we'll talk about if we get there. I'm sorry, I had you on the wrong screen, but this is what I was looking at. See the sell stop order? Right here. Right here. I got to get better at moving those screens back and forth. Thanks for your patience, guys. I'm new to this streaming thing. Not new to trading. Not new to coaching. Not new to the markets. I'm an old man compared with many of our listeners. Many of them are young enough to be my sons and daughters. Looking for a pull up now. I want to see a top tail if I can. Although I do like the way this has nearly tapped the 20 EMA on the 1 minute chart. You see that there? But this is what I'm looking for. More of a pullback. Even better if we can tap that 20. That would make me happier. I shouldn't say the word happy because I don't really have those emotions when it comes to the markets anymore. I'm very clinical about what we're doing here. These are just orders and transactions in a much bigger lifetime trade. There's one big trade. It's called my lifetime career as a trader. All right, 14 seconds for this 1 minute candle, and I'm going to tell you what I'm going to do. I may take this way back over here. Give me 1 minute. Give me 1 minute. You can see where I placed that. I'm going to let you digest that while I move my own things around here in my own platform. Bear with me. Sell stop order right there. Sell stop order to fill this wick. Sell stop now live. This is not my actual stop loss order. That's an emergency stop. The order's live below that wick. I'm in. As you can see, I need to move my own targets here on my platform. Bear with me. Awesome. And we're done. Trade is over, guys. That was a 10.75 trade. Nice and conservative here with all this movement happening and indecision. And there's a lot more to come here. I believe this thing's probably going to go significantly lower. But I wanted to get that most certain trade out of the way. And in the books, this is our third trade of the day. All three have been winners, thankfully. And that will not always be the case. We've had a very, very good string of streak of winners and a few break-evens along the way here in the last 2 to 3 weeks. A few losses too, and you'll see those on our videos, but kept them very, very small. And then we're able to have comeback trades, call them that just for fun. I don't usually use those terms, but comeback trades during the day and the range expansion. and end the day very, very green. Every day has been green. Every session, New York and London, have been green, thankfully. But that will not always be the case, and I always promise people to get ready for a string of losses, small losses usually, right? Very small. We manage our downside, and sometimes 4 or 5 back-to-back break-even trades, and I'm fine with that. That's all part of running a business with routine expenses and sometimes just no-shows, and those are the break-evens, okay? Thanks, guys, for joining us. I'm going to leave it there for now. We'll come back later if we have other opportunities, and I believe we will. We're in an environment where we'll have opportunities during this New York session. I will see you soon. Thank you so much for joining me. Have an amazing day. Take care now.